How's it going, YouTube? My name is Ari and welcome to my channel. It was originally created back in 2019 as Blue Lion Finance to show you guys through my journey from $0 to $100,000, but since we've just smashed through that goal, whereas my account is sitting on $106,129.28, I guess the next goal is $200,000, but more importantly for me is literally now just showing you guys through stocks that are discounted, and of course they're all going to be value and dividend investments because I want you all to smash through your financial goals as well. Now, in terms of today's video, that was a perfect segue because it's about 7 high quality, and I'm talking about rock solid dividend investments that you can add to your portfolio so you can be able to kick back and just relax through all of this stock market volatility as of late and moving into the months ahead. Now, just before I get to those 7 stocks today, I want to talk about just a little bit about what's going on in the market. Before we actually dive into all this good stuff, go ahead, tap on that thumbs up button and help me grow this channel. If you haven't already done so, make sure you go ahead and subscribe. I'd love for each and every one of you to be on this journey with me. YouTube, let's dive right in. Just before I get to talking about these 7 dividend stocks, I want to talk about the current state of the market because, wow, there is certainly a lot to unpack. And of course, it's the informed investor that's ultimately going to fare far better off come their financial futures. So with that said, it is very clear that inflation is currently the primary driver of market volatility, with the last reading coming in at 9.1% and the next CPI index reading scheduled for this Wednesday, August 10th. You got to keep your eyes on that. Now, it's been said inflation has peaked, but that's also been said in the past and it hasn't been true. Also concerning, we've had an inverted yield curve and officially reported negative GDP for a second quarter, meaning we are technically in a recession already. However, it certainly doesn't feel like it, especially as we've added over 500,000 jobs as of Friday's report, and unemployment coming down to a low here at 3.5%. Now, I'm personally sharing all this because the future is really a coin toss. And with that said, it's not exactly a great time to be YOLOing your hard-earned money into the market, but rather playing it a little more cautiously and investing for the long term. So without further ado, first up I want to talk about Pentair, ticker symbol PNR. It's an American water treatment company and it has a global footprint. It was founded back in 1966. Now, Pentair has grown into an industry leader with solutions for various customers, whether in the residential, commercial, or industrial segments, ensuring clean water through filtration, water supply, or even water disposal. As of now, their market capitalization is just over $8 billion. Now, Pentair has steadily been declining in terms of their stock share price over the course of the year as investors are shifting their holdings to anticipate what the economic future may hold. But the decline is now presenting, in my opinion, a great opportunity to jump in on a company that is nearly a dividend king with 45 years worth of consecutively paying dividends and increasing that dividend year over year. Just before we get there, I want to share with you that Pentair's stock share price has fallen from $70 per share to around $48 a share. That's 31% worth of a change. Its PE ratio is at 14.5, and get this, we even see very positive signs with hedge funds increasing their positions with the company and bullish blogger sentiment. Now, Pentair isn't necessarily the most exciting investment, but it's incredibly safe with a beta coming in at 0.84 and a very lucrative one nonetheless. Now, in my opinion, it's perfect for these economic conditions. And when it does in fact rebound, analysts are sharing that it's going to come back up to $54.50. Now, until it rebounds, investors can enjoy that refreshing dividend coming in at a dividend yield of 1.73%. Jumping into our next dividend stock opportunity, I want to talk about Emerson Electric, ticker symbol EMR. It's an electrical manufacturing company that produces products and provides engineering services for industrial, commercial, and consumer markets. Now, Emerson Electric was founded all the way back in 1890, so it certainly had its fair share of time weathering different economic cycles from downturns to upswings and literally everything in between. With its supply chain troubles this year, the stock has been beaten down for some time, peaking around $98 per share year to date before falling to around $89 per share, which is about a 9% change. Its current PE ratio is below 20 at 18.7. Now, given Emerson's sheer scale and ability to continue to produce revenue, along with quite a market capitalization coming in at $53.22 billion, the company is a safe haven for those longer-term investors out there. Now, at this time, we do see increased buying activity from hedge funds, positive sentiment when it comes to bloggers and retail investors, as well as overall news regarding Emerson Electric. Now, analysts, not to mention, are forecasting growth with the target share price coming up to $96.67 per share. Now, with Emerson Electric being a dividend king with 60 years worth of consecutive dividend increases, investors need not worry much about this passive income stream and can collect on a dividend coming in at a dividend yield of 2.28%. As for our third dividend investment, it recently reported earnings which came in very strong, yet the stock itself actually fell. So what an opportunity we have in front of us with Caterpillar. Its ticker symbol CAT. Of course, I'm sure you're all very familiar with the company as their iconic yellow construction tractors dominate the construction industry. But I want to just go ahead and highlight the fact that an investment in Caterpillar is an investment with a Fortune 100 company that is literally the world's largest construction equipment and engine manufacturer. So talk about safety, you have it with Caterpillar. Now, Caterpillar was founded back in 1925, and since then they've amassed a market capitalization coming in at $97.95 billion. But with their earnings, as I said, it actually took a bit of a beating there after reporting. The company's adjusted earnings were $3.18 per share. That was above the consensus estimate at $3.01 per share. And with revenues totaling $14.2 billion, down from the consensus at $14.4 billion, it was actually still pretty good considering their exit from Russia and, of course, countless supply chain issues. But ultimately, that stock share price, as I said, took a nosedive in the last few months, and even in the last handful of days, falling from $228 per share to around $184 per share, roughly a 20% change, with their PE ratio sitting at 14.7. Now, with the infrastructure bill having passed, that means billions of dollars are going to be poured into the industry, and analysts are excited. I couldn't be more aligned with them as they're coming in at a target share price of $224.85 per share. And until then, we can honestly just collect on a company that's been shelling out a dividend for 28 years, increasing it year over year, at that dividend yield of theirs coming in at 2.48%. Next up, we have a dividend stock that I have personally been talking about for some time now, since the market has essentially flipped upside down, and it's remained quite a steal for the long-term value investor out there. We are talking about Rowe Price, ticker symbol TROW, which is a global investment management firm that was founded back in 1937 with a focus on retirement planning for individuals, institutions, and financial intermediaries. Now, when it comes to Rowe Price's assets under management, we're talking about $1.6 trillion worth, in which the vast majority is tied up in the NASDAQ. So go figure, with all the market conditions and all of the tech growth stocks being beaten down pretty badly, Rowe Price's stock is of course knocked to some serious lows here. We're talking about a current share price of $124 per share, down from a 52-week high of $224 per share. Guys, that's a whopping 44.6% with their PE ratio at 12.2. Now, while many hedge funds actually continue to trade out of the investment, as well as insiders selling off over $1.6 million just in the past 3 months or so, I'd say that this is actually a pretty solid opportunity, again, for that long-term value investor who's willing to literally just sit in some volatility and be incredibly patient. But throughout all the waiting, an investor will be able to collect on their dividend, with the current dividend yield coming in at 3.72%. Moving on to our fifth dividend stock opportunity, I want to go ahead and talk about the largest direct descendant of John D. Rockefeller's Standard Oil, which is Exxon Mobil, ticker symbol XOM. I feel like not a whole lot needs to be said about Exxon Mobil. It's an oil and gas play, with the investment itself being one into the world's fourth largest oil and gas company. Not to mention, Exxon Mobil and all the alike are shattering profit records given the global oil prices that are all surging. Yet within the past few months, we can see that Exxon's stock price has actually fallen down from $104 per share from all the volatility in the market. It's now trading around $89 per share, which is a 14% change. Now get this, their PE ratio is at 9.9. It's got a low beta coming in at 0.49. Now, as the world is in fact continuing to progress in a green direction when it comes to energy, here are my 2 cents when it comes to Exxon Mobil and the outlook. Time is going to take time, and even if all the legislation was passed tomorrow in terms of green energy, there's just no way oil and gas companies are going to disappear overnight. So it will be a very slow phase out, therefore buying Exxon Mobil and Exxon shareholders some time. Now, Exxon is in fact working on their pathway to cleaner energy as well, with green hydrogen and ammonia. Ultimately, the future does in fact look greener, even for this oil and gas dinosaur, and analysts therefore foresee growth ahead, coming in at a target share price around $109.36. Now, until then, of course, shareholders are going to take advantage of Exxon Mobil's dividend. They've been shelling out for 38 years. Their current dividend yield is coming in at 3.73%. Coming up on our sixth dividend stock opportunity, I want to talk about AbbVie, that's ticker symbol ABBV, which is a biopharmaceutical company that if I personally wasn't focused on building up my position with Johnson & Johnson, I would certainly be buying right into AbbVie. It was founded back in 2013 and has just since done an outstanding job in terms of growth and of course outpacing a lot of the competition out there. As of right now, AbbVie's market capitalization is currently sitting at $245.49 billion. Now, just after reporting earnings, their stock actually slid, and it wasn't necessarily because of any troublesome reports, but moreover from eroding sales of its top-selling medication, Humira, in Europe, as well as COVID-19 restrictions in China and suspension of operations in Russia, all resulting in AbbVie's stock falling about 8.6% from $151 per share to around $138 per share. Now, their PE ratio is coming in at an even 20, yet in my opinion, it's just about giving an investment like this one some time, and most likely it will rebound before we know it, which is even why analysts are giving it a target share price at $162.33 per share. Now, until then, that AbbVie dividend we get to collect on is coming in at a dividend yield of 3.94%. And last but certainly not least, we have VF Corporation, ticker symbol VFC, which is an American global apparel and footwear company that was founded back in 1899, which has since developed and popularized some of the world's most well-known brands like Vans, The North Face, JanSport, Timberland, and Supreme, just to name a handful of them. Now, as any powerhouse would, VF Corporation is leading their industry with a market capitalization coming in at $17.74 billion. However, amidst all of this market volatility, from supply chain issues to inflationary concerned consumers, of course, their stock is beaten down from $74 per share to roughly $45 per share. It's about a 40% change, with their PE ratio coming in at 17.5. Now, get this, it had everything from increased hedge fund buying activity to insiders buying the stock up as well, and all around just positive news sentiment. Now, analysts are looking ahead at a rebound coming up to at least $53.86, and until we get more of this momentum for the stock, that dividend of theirs is coming in very strong as a dividend king with a dividend yield at 4.49%. Now, YouTube, that is it. Those are the 7 dividend stocks that I'm keeping my eyes on throughout the month of August. You should definitely be adding them to your watch list. Now, keep in mind that I'm not a financial advisor, so always do your due diligence following my videos, but certainly let me know your thoughts on all of these investments by dropping those comments below. And of course, before we get going, tap on that thumbs up button as that helps me grow this channel. If you haven't already subscribed, you know what to do, and subscribing to the channel as we speak. Now, YouTube, thanks for tuning in, and until the next video, I will see you all there.